So as we've entered 2016, we wanted to send you a video of our thoughts on what happened in 2015, world events, drivers of the market, our investments, and then what we might expect for 2016. Really, there are four things we want to touch on. Is interest rates, it is China and their equity markets, it's ISIS, and we want to talk about the commodities. So first we'll start talking about interest rates. So at the end of 2015, the Fed decided to raise interest rates. Now this is the first time they had raised interest rates in years. And our belief is that it's a good thing. Getting off of a zero interest rate is a good thing for our country. They raised it by 0.25%, so 0.25%. So it wasn't a significant move, but it was a move. And so we believe going up to normalization on their interest rates is going to be a strong thing. Now, one thing that we want to keep an eye on is if they move interest rates too quickly, if they move rapidly up towards that normalization, it could have the economy slow down and struggle. So we're keeping a close eye on that, but we don't expect that to happen. We do believe, though, that bonds will potentially struggle when interest rates go up. And so we should be aware short term that they potentially could struggle. However, the way a bond works is if you hold on to a bond for the length of the term, you'll end up getting your money back. So though there may be a short-term struggle with interest rates rising, we believe that is still a very good conservative investment. For China has had some significant ups and they've had some significant downs. They have been growing very rapidly and then their growth started to slow, but they still are growing. Now they are a developing market, and as their market grows, a significant amount of people will be going in and wanting more services, more goods, and that in general will make markets go up because companies will make more money because there's more people buying their goods and services. We believe that a growing China is a good thing for the market in the long run. And there will be stops and starts, there will be ups and downs for them. But it is a good thing, and we believe in the long run the markets will be doing just fine and China will continue to grow. Do want to talk about ISIS. ISIS, some terrible things have happened in the world in 2015, and moving forward we would expect to have some news headlines. Our belief is that ISIS alone will not create a systemic or a systematic downturn in the markets. It is a tragic loss of life when they do the things that they're doing, but it won't create a catastrophic systematic collapse. Our concern, however, is that as larger countries and larger militaries mobilize to deal with the threat, unfriendly territories and unfriendly countries start to get closer and closer, and their military start to get closer. And that could create large conflict between countries that are very strong. We already saw a little bit of that when Russia and Turkey had a little run-in with each other. And so that is really what we are watching as militaries are starting to mobilize, because that is something that could drastically change the outlook of the markets. I want to talk about commodities, specifically oil. Oil has had a significant drop in price per barrel, and that is largely because the demand of, or a price of oil is based on the demand and how much there is, so supply and demand. And the demand for oil is relatively flat, maybe going up a little bit, but the supply has gone up drastically. And so the demand has not kept up with the supply. And so because of that, the price has dropped. Now, 15%, roughly 15% about of the United States economy is tied to oil production or of some sort. And that means 15% of the United States economy is maybe a little weary right now, struggling a little bit, and that's a big factor for the United States economy. Now, in the long run, we believe a lower barrel cost for oil that's more consistent could be a good thing. But while the prices are changing, it definitely creates fluctuations in the markets. So looking forward, we don't believe that there is a systemic risk to our markets. Certainly nothing like 2007 and 8, where we had the banking collapse and freeze of credit. We don't believe that's the type of risk that we have, other than maybe one of the topics I just talked about, taking a major change or having a major change. So in our opinion, the markets should not have a significant downturn. We don't also believe that there's going to be a significant driver on the positive side. So our expectation is for a muted year in the markets in 2016. And we are positioning to do our best to take advantage of the opportunities that we do see. As always, you can call our office and talk about these topics, anything else with respect to your financial planning or your investments. We're always here to have a conversation, so feel free to give us a call here at Fisher & Wiens. And until we see you again, enjoy your time with your family.